Which is what is up, everyone? Once again, welcome to another preparation for the market with a nightly charting over the weekend. So as always, we're going to go alphabetical order, starting with American Airlines. So starting with American Airlines, just like always when I do charting, I always start on the bigger picture so I have an idea as to where the stock is with historical movements, seeing if there's a massive level that historically has bounced that we could be approaching since we have been on the downside move for American Airlines. Most of the levels that we've talked about over the last few months when talking about this stock, they're always going to come back into play. So as we're dropping down, last time we looked at American Airlines, we were literally in the same exact consolidation zone. We're still in between the 15.45 support, and then the rejection we've been having that we cannot hold above is 16.20, which goes back to, come on, I want you to go away. Which goes back to this heavy sell-off we had back on July 25th. And when we did have that pullback, we shot right back up, finished this 4-hour candle massive green on a heavy pullback. Once we broke underneath that level, roughly around $16.20, that now is going to be a support to resistance flip. And that is now why we're rejecting that 16.2 area. As of now, just like all the other stocks that are consolidating, the biggest thing you want to focus on when you're zoning, you don't want to try and guess or predict where a stock is going when it's in between the resistance and the support. I personally like to wait for the levels to hit and then play the upside or the downside, depending on where the price action is consolidating or pushing towards a zone. The overall idea with American Airlines right now, going off the daily picture, I'm expecting us to have a possible bounce off 15.45, going off historical levels. Once we broke above, we acted as support. Pushing up above it, we had a resistance at that level multiple times before the breakout finally happened. So we have been using roughly 15.45 multiple times in current price action. So if we do fail 15.45 on American Airlines, I expect us to pull back to the $15 a share, which will be another key level that we have rejected historically when price action is below. Coming down to it, it should act as a nice support level. If we do recontest 16.20 and we somehow break above that, we should fill a gap up to $16.77 on American Airlines. So now moving over to Apple. And this is one that I personally have charted a lot recently, so I'm going to turn off my levels real quick just to give you guys a brief breakdown as to what the bigger picture of Apple has been doing. Switching to the weekly chart real quick, I want you guys to see how we are back to the same levels historically that were at the time the all-time highs. Knowing that for our DD, our due diligence, the way we chart what we're looking at, the biggest thing that I would recommend to use when we come to levels like this. But now that we have broken underneath, and I'm going to delete a few of these levels just so I don't have to get distracted or anything. So now that we have broken on the downside for Apple outside of this massive rising wedge that we've been having higher lows and higher highs ever since March of 2023. We're finally outside of that now. The levels that are key, the all-time high level, which I will change this dotted line to a purple just so you can see it better. And then the other dotted line underneath is the next lower high from the previous all-time high. So we have the purple highlight being the all-time high that was happening back in late 2021, early 2022. Once we started making downside in 2022, we had a lower high around March of 2022. That level is key where we're holding right now. If we fail this, it's roughly $177 a share around that zone. The idea is to focus on the next lower high from Apple. Using that level, we have to find a good area to put an actual zone there. So when looking, like what I do when I look for a level, I'm on the daily right now, just look at the daily candles and I'll move to the 4-hour after I get a daily that I think is in a good alignment. So I don't want to choose just a wick on this previous lower high from the 2022 all-time high that hit. I'm looking for more touches. We had a wick that correlated back here with Apple, along with a wick here, and we had the all-time high pullback that held support. You can use the wick. Personally, I always feel like when price action approaches these key levels, they have like a wick that goes under that fakes people out, because most retail they use this dead set wick at a push on a daily, a 4 hour, whatever the case may be. So I like to kind of pull this down and give it some room on the pullback. When I do pull it down, notice how the levels that we now have are more in connection with each other. We have this wick slightly above the full body to the left of that wick candle. When we take this back now, we're in correlation with the inside candles. Instead of just the highs, the wicks, the full bodies, we're inside those zones now. And when we pull back, this is where most of the price action is rejecting back in early 2022 after the all-time high at the time happened. This is the key idea of it. We can keep it at that wick, that's perfectly fine. But more times than not, for me personally, when I put a level, I'm gonna make this so it's bigger. When I put a level just at a wick like this, price action comes under, it pushes right back above. It fakes people out. I'm sure you guys have been faking out of positions by doing stuff like this. So I like to give it room to move. It's not a pinpoint of I need the level to hit here exactly. It's just the idea of knowing, okay, if I keep the orange here and we pull underneath, it's like, oh my gosh, we just broke a level that I put historically for a reason. I want to give it space. And I know this now because obviously I'm telling you guys, now you're hearing me. When I see the orange approaching, I know we already broke that wick from the lower high from the all-time high back in 2022. The major support I want to see is the heavier resistance historically. If we put it up here, there's a few wicks that hit dead on, that's fine. If you want to put a level here and a level down here, that's perfectly fine. I just like to keep it clean and give it more space to move so I'm not distracted or I rush into a play. So I like to keep it where like that fill is for multiple candles that touch and not just main wicks. When switching to the 4 hour now, and I can drag this back to see how this all looks. You see how the 4 hour now looks more in alignment. There's more candles, there's more wicks for 2 days back to back. We had these wicks, obviously, pre-market and intraday for the actual 175.11. But if I come back more, I'm going to change this back to orange. Come on, keep going. There we go. Now you can see the correlation with the orange a little bit better. Where multiple full bodies, multiple wicks, and more than just one area than putting it up here, we have more confidence with the play now. More price action is needed that could obviously wick underneath here in current price action. We come down and push back up. We're giving it that room to like give us that drop down, a quick wick. So going to the 30-minute, the current price action. Come on, no water. There we go. Usually the level would be around right here. So imagine Apple comes down, breaks underneath, and then right when you think, oh, I got to get puts, it's doing this whole thing. Okay, it's rejecting the level, support to resistance flip, I got to get puts, it can still come back up. So I like to give it that space, a few cents below. That's just personally how I do it. I've gotten wicked out multiple times doing stuff where it's like dead on with like the highs, with the wicks. This level obviously goes back on the daily right here. But that's the idea with Apple right now. If we do hold this 177 a share, Apple will push back up to 181.2 area. If we fail 177 a share, notice these levels on the rising wedge that happen. Don't leave out stuff like this just because, oh, it was back in May of 2023. It's not going to do anything previously. The whole idea, you're using historical levels to give yourself current DD with your charting. That's the whole idea of it. History always repeats itself. As these levels contest, notice how we rejected right here in this area. We have a rejection here. We pulled back. This pullback, oh my gosh, why do we bounce right here and go back up? Historical resistance right here. Once this broke above, We pull back, contest this support multiple times, still contesting it as support. Then we make the next leg up. Once we make the next leg up, we use the last resistance that could not break on the breakout as a support pullback. Rinse and repeat. So these levels will come back into play. If we fail 174 area, guess what level is going to be in play? Anywhere around here, 170 to 171. This zone is going to be filled. So I'll keep it about 170.5 just so it's in the middle. I'll make it blue. And we'll go back to the current price action real quick. So with Apple, quick recap. If we hold 177 a share and we push upside, we got 181. And if you want a level in between 191 and 181, you can just use anywhere in between this zone right here. Around right there. Resistance, a lot of chop. Once we broke out, we pulled back and held support there. Resistance and support flip, and we bounced up to the new all-time high, and then we flushed right through. So you can put a level. If we break 181, we'll push roughly to 186 area. If we fail 177 on Apple as the support, we're going to fill the gap to 174 area. If we break that, possibly 170 a share on Apple. So now going over to AI. Just like always, we've been charting this for multiple weeks back to back, so I don't have to change any levels. The only thing that I could do is possibly move a highlight area just so we can have a possible double bottom visual as I explain this. Possible bounce here based off sell off last time underneath roughly the $35 share level right here, the orange. We fell underneath, hit this nice buy zone, push right back inside. Now we're back to that level. We also could be forming an inverse cup and handle, which if you guys know this setup, we get a nice curl. It's inverse, so upside down. We pull back, hit a double bottom, and then we form a little cup with a handle right here. Just go back down. I'm not saying this setup will happen, but just going off the current formation, we should get a nice bounce on AI around this $32 a share, possibly push back up to $35 a share, this orange highlight, and then reject to the downside. If we do go down more, AI will contest roughly 29.7 area. If we do push upside, we break 34, we have the levels that we've been using as historical support is now going to act as a resistance zone at $37 a share. So I'm going to go into depth with AI real quick just to give you guys a better teaching lesson right here. And as I do the rest of the stocks, I don't have to talk as much, obviously. Notice with AI here, once we broke above, imagine you don't know anything that you see in current price action. We see a breakdown. Okay, we bounce here, we push back upside. Okay, so right away, we're starting to put in levels. This orange right here can be a zone anywhere between roughly 35.4 and $35 a share because we have areas where we've tried to hold support or rejections intraday. Wicks above up to that $37 a share. As this forms, this is when you can get levels going. You have more confirmation now to actually put stuff in. So 37 a share, we're holding support inside every pullback bounce. Where are we rejecting on those bounces? Roughly $42 a share. That is the rejection zone. As this forms, boom, back down, back up. We broke out upside, couldn't hold, came right back in. Not enough strength on the buying side. Then we contest that 37, we flush through, and look where we push right back to, $34 a share. We touch it, we push back up. Come back down, go back up. And then we flush through that $35 share area. Now we're back to the breakout from the buying pressure around 31.5 area. We're currently roughly at $33 a share on the close price. So just a quick recap. If we do not double bottom here, we will contest $29.70 area. If we bounce, we'll contest $34.80, aka $35 a share. If $35 a share finally has buying pressure and we break back upside, which is a historical support, which is now going to act as a resistance. If we break above, we will contest $37 a share, historical support, which is now going to act as a resistance. So you guys always mention AMC, man. This stock is never going to go away after that craze. So going off the daily, I know there was news that came out Friday. APE, the ape that ran. AMC came down after hours. So as of right now, with the daily, obviously it's a green candle, but we switched to the 4-hour, we came down a lot. So on the daily, knowing that we came down, I'm gonna find a level for a support. I know looking up here, after hours 3.95 area, so I can get a brief idea around that 3.95. If we want to use this 3.77, we can put a level around here for support, which is roughly 3.8 area. And if we want to add another one, we can do it around. We gotta be very careful with this one. I may have to switch to the 4-hour to get a better idea. This one works right here. Yeah, that should be fine. I can raise up a little bit more. So the idea between these two levels, I'll make one blue, I'll make the other one orange. Quick breakdown. AMC, there's not much going on. It's very choppy. We had resistance, tight chop area right here. Up, down, broke out finally, pulled back roughly in that zone. It's about 25 cents higher. But once we came back down again, we held that level. When we flushed through, roughly $3.80 held, we pushed back upside. Every time we recontest these levels, we have an effect on them. So currently with the idea of where AMC is right now, we're basically inside that zone. We could gap up tomorrow on Monday. We could gap down in pre-market Monday. The idea is to watch roughly around 3.8 a share and 4.15 a share. If you want a level above, if we break 4.15 on the upside, I would be watching roughly around $4.50 area. Downside, obviously, there's no pinpoint, but 3.77 you can use. If you want to use an even lower level, you can do around 3.64. But the key three levels are what you see right here. 3.8 is support, 4.15 is the first resistance upside, and then the gap fill for the consolidation historically is roughly 4.5 a share. So now going to AMD, which actually broke the support. This is going to be nice because we can look at the after effect. So I'm going to take away a few of these highlights so it's not as confusing for you guys. So the idea with AMD right now, semiconductors have been kind of shaky, possibly weaker than most other areas. The idea is to look for a possible bounce on a dip or a recontest of resistance that broke as a support on the downside. So looking at AMD right now, we have this trend line we were focused on the daily with this rising wedge. We had a few underneaths and pullbacks. The purpose to look at this with the current PA, understanding we're in chop right now. On the 4-hour, we obviously tanked underneath, but we're technically still in a dip buy area on AMD. This is not technically bearish yet, only because we could possibly get a little buying zone, push back to 112 a share before the actual flush where it starts to make lower highs off the trends like this right here. Oh geez, that's not what I wanted. Hang on, trend line, there we go. Lower highs based off this right here. So you always got to be careful, not looking at the smaller time frames and thinking, oh, AMD's going to flush. We could always pull back to 112 and then go down, making lower highs, lower lows. As of now with AMD, going off just a zone with a possible bounce, we're in that area. We have a level at roughly $104.80 a share on the downside that could hold as a support level. If we do bounce off 104 or this zone that's highlighted currently, we could push back up, and I'm going to put a level in between current price action and 112 a share. There is going to be a lot of areas around this. Let's go yellow highlight. Around $110 a share. I'm going to go down to 1-hour time frame. So if we don't bounce off this support or this area of highlight, we will pull back to roughly $104.85 a share. If we push upside, we have the first resistance price target at $110 a share roughly, and then above that we have roughly $112 a share. AMD currently is at a possible liquidity grab, so don't assume I got to get puts before it's too late. Be very cautious with this type of setup. So now going over to Baba, I'm going to go to the daily just to show you guys an idea of what's been going on. So we're still in this rising wedge of higher highs, higher lows trying to form. Could we get a pullback to this trend line? Let's take it down on this time frame to see what's going on. As of right now, I'm going to change this to yellow and make it a dotted line, make it thicker. This yellow is going to be a massive level for a bounce possibly. This is where we bounce multiple times. It is a possible chance this could happen again for Baba, bouncing roughly around $94.50 a share. The idea of this going higher is obviously the low risk, high reward. Downside is high risk, low reward, only because this is still going to be intact until we break under and hold. If we bounce off $94.50 a share, first price target on the upside for a resistance is roughly around $97 a share. If we push past 97, we have a level at roughly $99.60. If we break support at that 94.5 a share, watch the gap fill to the trend and also this historical support level at roughly $91.50 a share. Around this area right there. The idea with Baba, just like every other stock, don't grab puts because, oh my gosh, if we break this support, we could go even lower. Don't buy in anticipation of a break. Buy with the actual visual. This is breaking downside. I am able to get into this position. If we break this 94.5, catch the recontest from a support break to a resistance recontest, and then play to the downside. Wait for that close underneath before you execute that put instead of chasing the breakout that could wick back inside this little consolidation. I got an AMD 140 call, 1020 at 1.04 swing play. You should be fine. I'm not saying anything is weak. I'm just based off levels. I swung calls over the weekend as well. So don't think, oh my gosh, I have an AMD call. Like, you should be fine. I don't know when you got it, but the idea of the long game is what matters the most. So now we're looking at Ford. Ford is one of my favorite stocks right now, and the same levels are intact as last week. We broke through that $12.77 support level heavy on Thursday. Now that we're inside the zone again, the support that I've had, well, level that I've had since the last time we played Ford at roughly $11 a share on this orange highlight for calls that we swung, there's a level around $11.80 that I like a lot, only because of the indecisive in between this lower high and higher lows of this symmetrical triangle or squeeze and wedge, whatever you want to call this setup for your personal arsenal. Until we actually hit $11.80 as a support and show buying strength, I'm not interested in trying to catch calls in no man's land right now. The idea for me, I want calls at $11.80 with strength to push upside, see the trends reverse from bearish, which we're currently in for Ford, into a bullish trend on the upside. If we bounce off 1180, we will push back up to the break that happened at roughly $12.77, $12.65 to $12.77. If we break the 1180 on the downside, we will fill the gap to roughly $11.43, roughly $11.40, due to all the levels that we've had. Ford is very iffy right now. Obviously, puts, if you're buying now, puts up here would have been better. So I would not recommend chasing, just like AMD and everything else with put side. Wait to see what levels do. A pullback to the upside is natural. A bounce, a dead cat bounce, retracement to the upside after the sell-offs we've been having. Watch a bounce off 1180 for Ford and watch that fill back up to $12.77. So now looking at First Solar, which is FSLR. I'm going to go to the daily real quick. We did chart this last week, so our levels are still intact. The trend line held in that pullback at the start of the week. So going back to the 4-hour now, we are currently at a resistance zone at roughly $205.30 a share. If we break upside on that level, I'm actually going to add in a little zone in between this at roughly $210 a share. There was a lot of indecisive, and I'll show you guys why I put this level here. Few wick pull-ups, massive supports that held after the break above right here. Then we had support. Indecisive chop is not very important, but in between the breakdowns and the breaks above, the recontest are what I'm watching before massive flushes or moves. So we have areas where this 210 has been respecting price action. If we break above this $205.30 a share level, the zone will break upside, possibly contest 210, and have that retracement as a resistance to support flip. So if we break out of FSLR to the upside here, we could touch 210, pull back to 205, hold that as a support now, and go higher. Energy has been hot. Energy, oil, the whole sector, XLE, which we also will be charting in a little bit later. So we need a break above 205 a share to fill that gap to 210, possibly touch 218 a share again. If we reject 205, we more than likely may not fill the gap to 195, but we will fill it to roughly 200 a share in this area right here. There's a lot of indecisive chop right now with a few stocks. So you got to be cautious, you got to be patient, and use the levels as they form. So JP Morgan, JPM. Let's go to the daily real quick just to show you guys. So let me make sure on the weekly. Yes, perfect. We are approaching all-time highs on JP Morgan. We didn't get quite up there. We were about $4 short on this last push that rejected. And just like we have been doing, we may need to add a few levels here, but I'm going to put one where we have currently been bouncing, since we also have a few wicks back here. So this zone is going to be key. I like how we had a massive wick down that was bought up instantly. This 4-hour candle went massive red and finished green on close. On Friday, that happened this past week. We had a wick that touched around the same area, around 152.59. So I'm going to use that level. I'll change it to orange, and I'm going to go back on the 4-hour and see if there's any correlation with that actual price action zone. This is when I wish I had TOS, the zoom out, zoom in. So we do have massive support pullbacks that have happened around that 152.58 area. We also had resistance when it pushed upside towards it. So this level is going to be a key factor based off the wicks and current price action, and also going back and looking at the bigger picture with these drops right to that level, pushes right back up. So we have evidence with that. So going back to current price action now, just looking at supports, the upside is obviously you can use on the 1-hour time frame just the main levels we've had in this kind of curl or pullback from the push we tried to make to all-time highs. If you want to add a level, I'm looking for a relatively good one that's way above where we currently are, because we can put one roughly in this area, and then obviously the highs. We got rejections right here, basically a double top before the sell-off. We tried to push back up, made a lower high here. So this level has played an effect as a resistance, and when we break above, it can't tend to hold when it pulls back towards that level. It always flushes through. So roughly 157.68 area is a nice level for a rejection on the upside. I get that's like a 3-point move, but if you're focused on the current time frame, there's a lot of chop in this area. So using levels and gap fills will be key. If we can hold and not pull back to that 152.58, we could break out of this bearish trend currently on JP Morgan and make upside momentum. But until that, we are still working our way down with these supports: 152.58, 151.22, basically 150 a share even. So looking at the upside, we got 157.6, and then basically the previous high in this push, which is roughly around 159 a share. The high is 159.38 area. So looking at LCID, I'm going to go to the daily real quick just to show you guys where it's currently sitting. So you know we've had a massive pullback over the past year, well, 2 years, I should say. And we're back at this support that's holding. LCID has been very accurate with filling zones. When I chart, my levels are never to a pinpoint, like to a decimal. It's just an area or the zone of the chart that has respect to price action. This pullback that we had held once again and pushed back upside. There wasn't much strength, and that's what put us back into lower highs once again. Last time we were in lower highs for LCID, we hit a support and we bounced. So we have a lot that we can work with in this area. We held the support zone, which I'll put a level here just so you guys know what the price is on it, around $6.18 a share. I'll change this to blue. The idea of looking at LCID, we're making lower highs, we're holding the main support at roughly $16.18 a share, or $6.18 a share. If we can hold that support and break out to the upside, one of my favorite things to do is use these previous lower highs as breakouts to the upside. Use these levels to the upside. So if we do hold support and push higher for LCID, I would be watching for resistance, $7.22 a share, roughly $7.69 a share, and then anywhere from the high on these wicks to the resistance historically in this area, it's a zone, roughly $8.28 a share. We need buyers to step in. If we break this heavy support, roughly $6.18, we could push back down to the lows, which is roughly $5.50 area. I would be cautious with this. I'd wait to see if this support can double bottom, possibly wait for a flip of a trend from bearish to bullish to make higher lows and higher highs in the moment. Everything's a timely play. There's no rush. So we are now looking at Lilly, which is at all-time highs. When I chart all-time high stocks, all of this price action means nothing. All of this back here means nothing. Because to get to here, we got to break all this. So this is when I only take it down to like the 15-minute or whatever I need from the current price action that's happened after the breakout. If you want to put a level from the previous all-time high, that is fine. So if you want, I'll do that for you guys. I'm going to delete a few of these. I'm just going to move one level upside to do that. So I'll put a level at the previous all-time high, which is roughly around there at the purple. And now I'm going down to the 5-minute. This is all we need. We know the purple's previous all-time high. This stuff now is all we need. So if we want, we can put a level at this after the earnings push, pull back, the bounce. Put a level right here based off this intraday bounce we had that led into the next day. We have not pulled back to that level yet. So if we pull back to roughly $513 a share, that could potentially be a bounce, even though it's only happened one time. The main bounce is going to be the previous all-time high down here, this purple highlight, which is roughly $472 a share. Going outside, I want to switch to the 1 minute now, just to show you guys a little trick that I do. Going off pre-market high or pre-market area high and a pullback off open. Notice how off open, obviously we tried to push and we pulled back on the 1 minute, then sent off this level area around here. This zone will be key. This entire zone right here. So if you want a level for visual, it's roughly around about $500 a share, $502 a share. That could be a potential bounce as well for Lilly if it pulls back to that point. Going back to the 15-minute, just to show you guys this one more time. Get out of here. What the heck is going on? Come on, there you go. We're in a bull flag, if you want to call it that. After the earnings report, we're still zoning. Lilly is a hype play. Can we go higher? This is as high as we've been on the stock. It's all like hopeful continuation. If we pull back, watch support around 513 a share, support below that, 502 a share. On the upside, I would just use the all-time high, which is roughly 538 a share. If you want a double top projection from Friday and also on Wednesday, you can use a level at 532 for like the first target for a resistance break on the upside. So now going over to Meta. Tech has been selling off, man. I like it. I like it. I like it. So going off the bigger picture on the daily, the reason I have the daily pulled up, I want you guys to realize, yes, we are making downside. Yes, people are thinking I got to get puts before it's too late. Please realize we are still making higher lows. We're still technically in a bullish setup on Meta. I get people say, well, why don't you put the line right here? I'm going off this past drop off that happened. We pulled back here. There's a massive support level here. And we have a level here to around 290 a share. We are in higher lows still. If this breaks down, obviously you can say like, why don't you move it up? Why don't you move it down? I have this as a visual. Until we break under 290 a share on the downside, until we break this level right here, we are still making higher lows. So until that level breaks at 290 on the downside, we are technically still bullish on Meta. Yes, I know we're dropping off. That's what we use levels for. On a pullback to 290 a share, possible bounce to get calls on a pushback upside. We have a now resistance since price action is underneath this level at roughly 305 a share. If we do break upside above 305, I would be watching a price target of 316 a share as a tap out level. There's not much to do with Meta right now. A lot of tech is zoning, slight pullbacks. It's going to be a very patient week to see how tech reacts Monday and Tuesday. We have FOMC minutes on Wednesday, so a lot could happen in between that. So looking at mRNA, I'm going to switch to the daily real quick just to show you guys that we have broken down into levels we have not seen since basically 2020. Who remembers when Meta was $100 in December? Bro, I'm pretty sure everyone remembers when Meta was that cheap. So mRNA right now is back in levels we have not seen in over basically 2.5 years. 2.5 years we have not seen these levels. Or yeah, 2.5. So at this point with mRNA, it's finding major price action areas that we can try and use in the current time frames. There's not much you can use with what you see right here. So is mRNA worth the time to watch? If you want to put just levels that you can have, we can put a nice area roughly around right here. We got a wick. If we pull this to the current time frame, once we broke above this level, we wicked out on the daily here. Then we finally broke above and we pulled back with the wicks for a support, and we stayed above that level at $84 a share. When we did pull back, we never touched it. So 84 showed resemblance at that area. As we go to current price action, the only levels that I would recommend for you guys to watch if you're interested in mRNA, the biggest thing is to watch the resistance at roughly $105.80 a share. If we get a pullback to the downside, I have a gap to 91.6 area. It's basically a $7 drop from the support we've been having in this consolidation right here. mRNA is very questionable. I don't really like this because it's kind of like a hopeful, oh, we're going to keep dropping. We're in a bear flag. We can go lower. We could bounce here for no reason. mRNA could have news that take people out on the daily underneath, and now they're going to send it right back up. That's because no one. Yeah, I mean, mRNA, bro. Every vaccine stocks made their money off pushing their vax. So they all ran during COVID, obviously. So now it's kind of like, what can they do to keep the company running with funding? What other cures can they make? Basically, that's what most of these companies are trying to do right now, trying to find other vaccines for different diseases or just pushing more vaccines for COVID. So moving over to Microsoft, just like the other tech that we've looked at, everything's selling off. The difference with Microsoft, we have broken the trend to make lower lows now. We broke the higher lows into a bearish trend now. Unlike Meta, that's still trying to stay strong. The same levels we've used for the past few weeks on Microsoft are now in play on the downside. We had around 328 a share as a support that we broke through. Notice how once we broke through 328 a share, look what happened. We broke underneath, recontest failed. Recontest failed. Twice it recontested that level. So if you missed the breakout on the downside, the breakdown, you had a chance to get puts on the recontest. It dropped 7 points from that recontest. The very next day, recontest again, dropped another 7 points. Now it's hovering at a support zone at $320 a share. Looking at Meta on the 4-hour, personally, what I see with this, if we can hold 320 a share, if the market has like their dead cat bounce Monday and Tuesday, we could recontest 328 a share. If we break 328, we should fill the gap to 338 area. If we break 320 on the downside, notice my gap. It's not small like underneath. It goes from 320 down to 312. Why is my gap so massive? When going back, notice how when we broke above this area, we tried to hold, we didn't, straight flush down. There was no buying pressure, no like, oh, let's see if market makers can push their funding back up and make Microsoft have some strength. We flushed right down to this level, which historically was a major rejection. Isn't that crazy? So I'm looking at the gap if Microsoft cannot hold 320. It should fill the gap roughly to 312 a share. And like I was saying earlier, if we hold 320, I expect us to recontest 328 a share. So now looking at NEO. NEO has also had a nice pullback. On the daily, I just want to pull this up to show you guys. Last time we had these breakouts, notice what happened with retracement. We pulled back, we found a support, we had a bounce. We pulled back, tried to find support, it was iffy. At this point, we made new highs off the last pushes that we made. So we have to watch for support bounces. We can't anticipate, oh, we're going to bounce right here for sure. We got to wait for trends to reverse back into a bullish sentiment. Last time we sold off, we were bearish. Then we made bullish trends of higher lows. So you got to catch the move when it forms. You can't chase it because one little pullback on stocks this cheap, your contracts get destroyed. So as we pull back on this, if you want to pull this trend up and use this, it could correlate with this $12.43 area for a bounce. If we flush underneath, this is when I like to use historical areas for a possible bounce. I'm looking for a possible flush on NEO. If we break $12.43, I would not be surprised if we pull back to this area right here. And that's roughly around for NEO. I'm going to choose the top of this area, around $11.22. I'm going to take this away now. And I'll change this color to red. I'm going to delete these levels underneath. So looking at NEO, we had a massive run. You have to realize from the lows on NEO in what was it, early June until now, we ran from basically $7.50 to $16 on a share price. So people are definitely going to sell and take their 100% gains on their shares they bought earlier at the lows. A pullback here, I don't know how big it's going to be. It could be back down to the single digits, but you have to be cautious with setups like this. Don't anticipate, oh, we have to bounce it. We've already pulled back $4 a share. There's no guarantee. You need visual reasoning. You need a logical reasoning. I would wait for more candles to form multiple days back to back that show strength on support. We only tried to hold that $13.21 2 days back to back, and we failed right away. The very next day, recontested that level from a support to resistance flip, and we rejected it. How can $12.43 hold if we contest that level this week? That is the key level right there. If we fail that level on the downside, I expect us to fill the gap to roughly $11.22. So now looking at NVDA, I'm pulling up the daily just to show you guys this one more time. All this crap back here does not matter. All this white highlight does not matter. So all I need to see is the current price action. Is it the 1 hour, the 2 hour? What do I need? 1 hour is not big enough. There we go. 2 hours perfect. This is all that matters right here. So looking at NVIDIA based off what we only need to look at, let's do some quick charting on this. So we had a massive support level back here, and also a little double bottom area around here. So we have two main levels for support that could affect us when price action occurs. If I pull this one over, we are currently approaching this area, and I'll put a level roughly around, I want to find a good, there we go. It has to be up a little bit higher. And I'm going to show you exactly why I put it that high up compared to the highlight. Looking at resistance and support based off historical price action. We held support here. There were wicks. I get that. The wicks were bought up. Full body candles formed around this area. Multiple wicks were in correlation. The very next day, this wick down went right to that level and it bounced. Pre-market, after hours, I'm not too worried about that. By open, we're back up above that level at $404.80 a share. Massive wick, bought back up, NVIDIA pushed back to the upside. Going off historical now as a resistance level. Rejection. Once we broke above that level, pull back to a now support. This level should play into a good effect on NVIDIA. And if you're looking, we're only about $3 away from touching that area. Don't use it as a pinpoint, but the idea of using this level, roughly, I'd say between $404 a share to $405 a share, that will play into effect on NVIDIA. Looking at the level below that for the gap fill, obviously there's a lot of chances we can bounce where these wicks are, but I like to look at the fill, so I have like more patience. I'm waiting for the trade to align more. I'm putting a level at roughly $375 a share. If you want a level in between, I'll put one there for you guys. I put it around here only because we have a rejection wick, a wick above that pulled back, rejection wick, rejection wicks, support tried to hold intraday, end of the day on a pullback. So we can use roughly $395 a share. So these are the main levels I see for NVIDIA. It moves quick, you guys. You can't just put like levels every $2 on NVIDIA. You need gaps for stocks that move quick. If you just put levels on here like this, you're never going to know what the hell you're doing. And you can't just have a level on a stock that moves quick every $3, $4. If you're day trading or scalping, that's perfect. But when you're looking at the larger picture, you can't just throw levels in because, oh, a wick was here, oh, a candle was here. You need multiple confirmations. When NVIDIA breaks levels that are key, notice how quick it flushes. I mean, right here, we had a support level, try to hold on pullbacks with wicks. Once we broke underneath, we rejected that as a resistance. Once we broke above, we tried to hold it as support. Once we got back to that level, we tried to bounce it. And once we couldn't, we dropped a whole $13, $10 easily within a 2-hour candle almost. That's not what could happen, but imagine if we break 404 and then we come down to 395 area, and then we're next thing you know, we're at 375 again. So you have to be cautious with every dollar put a level. This stock moves, NVIDIA can move. If we bounce off around 405 a share, we should recontest the break level, which was around about 418 a share. And just like what Mr. Trade said, you can use roughly 415 to 418 a share. That zone is going to be a key area. How does ATR play on our support and resistance? Perez, do me a favor. I'm not good with abbreviations, bro. I apologize. ATR, someone help me out. Average true range. Okay. So when looking at the average true range, I personally don't use that unless I do and I don't know like the textbook definition of what I do. But when looking at the average true range, larger time frames help a lot. The ranges are always going to be like how I look at them. It's like the zones, like the up down between resistance, the consolidation, whatever you want to call it. So for me, I'm looking to find, bro, you got Mr. Trades, bro. I trade basic and it works. All these people doing high tech stuff, I don't know why they do it like that. I don't know textbook names. I just go off what I learned from people, and that's just how it is. People say supply and demand. Other people say support and resistance. Some people say a rising wedge. Other people say higher lows, higher highs. Like it's just like different words to say everything. So like for me, I'm looking for like the support and resistance that has multiple holds in that area when I'm looking for stuff like that. So you said average true range. So that's basically the like the IV you're looking at with stocks. Like, oh, it can move X amount of points in a day. I don't use stuff like that. I know TOS offers it. I believe IBKR also offers it. I don't use those. I just use the levels. That's just me personally. So like, if you're using stuff like that, let's say hypothetically on Friday, NVIDIA had the ATR at let's say 15, and we're at a level at 418. We have a level underneath at 404. That's basically a $15 drop. So if you want to use that into your confirmation for zone fills or gap fills, you can. Personally, for me, I just go off the chart, the volume. I'm not interested in what they are predicting the stock to move. If you know how a stock moves, you know the capability of how much it can move in a day. If you're looking at a stock for the first time ever, you don't know much about how it moves or the anticipated move per day. There's no idea. It's just hope. So like for me with NVIDIA, I don't know much about this stock, so I can't say anything. I just know it moves quick and I don't trade it. But other stocks like let's say Ford, we know Ford roughly moves 10 to 30 cents in a day. When it has a massive move of 50 cents, that is a more than like normal move for that kind of stock. So moving over to Oxy now, I'm going to switch to the daily just to show you guys that we're approaching a massive breakout level. And I'm going to put one not at the wick because that's an area I don't like much. That's going to be a nice support pullback. And we'll do one around right there. So when looking, I'm going to switch to the 4-hour now. I'm going to come back a little bit. So this level I put that I'm going to make blue, and then the resistance I will put as orange. Why did I put those there? That's what people usually ask. So let me just go to the daily to show you before I go back to the 4-hour. So going off resistance levels, multiple wicks back to back. Once we broke above this and we pulled back to this level as a recontest, we broke underneath, kept having resistance at it. Once we broke above, it tried to hold support, resistance, support, resistance. Multiple pullbacks are in correlation with roughly $65.42 a share. Wicks are on point, full body candles, a lot of correlation. It's not just one or two candles that relate to this level with price action. It's multiple areas after massive moves to the upside, pulls back $10 plus, and that level is still into effect almost to a pinpoint. Going back to the 4 hour, you can see it more with the actual candles forming, with multiple rejections, support holds on that key level. With the 67.33 area, it's not a pinpoint to the decimal, like have this exactly right, but around $67 a share, we have price action with relative strength that repeats itself in those areas. So we can use those two levels. These wicks in between, I don't want to chart those and get faked out by, because if I put a level like around here, it's just wicks that reject, wicks that hold support and push up. We can use that level, but look where it's currently at with the price action. It could cause a lot of fear in people when they see, oh my gosh, we're right at this level. What's going to happen? So I take that away. So I'm only stuck with a pullback to a support at roughly $65.40 a share, or we hit the resistance and a reject level for puts up at 67.33. I don't want to get faked out or scared or confused with multiple levels in between when I can just wait for the massive upside or downside move. If we break 65.42 area, we can use the previous resistance area that was not able to break out at roughly $64.50 a share. If we break upside at the 67, there's not much going on outside of a few wicks in between. There's a lot up here. So I'm not going to say like we're going to hit a gap fill, but if we keep pushing upside on Oxy and we break 67.3 area, 67 a share, we could have a nice little breakout continuation multiple days back to back. Basically the same movement we had the past few weeks on this stock could happen again if we hit breakout levels. So looking at PLTR, this is also one that we've been talking about a lot. We're almost back to the main support I was telling you guys about, around $14.58, which historically was a resistance once we broke underneath around this area right here. So now that we're back at this price action level, I'm going to switch to the 4 hour. We're almost at that key support at 14.5 area. If we can hold that, we could curl back to the upside. I like to keep the main levels, but if you guys want to add a level in between here, it's not a pinpoint, but there's a zone that's rejecting and holding support on both ends. So we can put a level at roughly $16.10 or so. I'll make that purple. So looking at PLTR just from this perspective right here, it's the idea of we have a main support at roughly $14.58 area that could pull back slightly. If you're on the 15-minute, notice if you see this break, you don't even realize there could be a support down here. So you want to look at the bigger picture when you do stuff like this to understand historically on the daily. Oh, too far back. What are you doing? We held this rejection right here where my cursor is moving. So this area is going to have buying pressure possibly. So you don't want to get faked out in the smaller time frame when PLTR may drop heavier. It can have a dollar drop and push right back to the upside. If we do hit that 14.59 area and push upside, we have that level at roughly $16 a share. Then above that is my actual gap fill I would like to see, and that's back up to $17 a share for PLTR. So now moving over to Roblox, and this must have had earnings, which I assume it did. And we're back to these levels again. So after earnings, I don't like to really pinpoint where stuff can go. Since we are back trying to form new levels with historical areas, the only thing I would say is watch this right here. I'm going to take away these levels. So this purple highlight down here, this is going to be important because the last time we had a break on the downside, this was like an opening print that tried to push back above and couldn't, and it failed. And before it failed as a rejection, it was holding this support. So putting a level around this zone, it's not a pinpoint, but just around this area at roughly $29.70, this is going to come into effect. And we're basically at that quote unquote support level. I'm not saying buy calls because we're at support. This is like, give it a few days, let Roblox get some formation going. Be patient with charts like this. Don't anticipate where it's going to go just because, oh, we sold off massive. Now we have to go back up. Wait for confirmation and it will form in front of your eyes. So RY for OBK, looking at this, it's around 94.84 currently a share. We've been zoning up and down. If we're looking at the key levels, there's not much to work with here. We got resistance there. And I mean, we got a massive support down pretty heavy. And it looks like we're in a downtrend right now, trying to fill a gap like we have been. I don't have a true idea of what could happen with this. I'm just going to speak on levels for this because I've never even heard of this stock before. The idea of looking at the resistance is a chop zone. It's not a pinpoint, but an area roughly around $98 a share. It can go higher up to 99. So between 98 and 99 is a massive rejection zone. Looking at the in-between levels that could bounce or resist as a resistance zone, we can possibly use around this area right here. When I switch to the 4-hour, that's so nasty. Let's stay on the daily. There's not much volume on this either. We have a lot of candlestick correlations at this 93.94 area, roughly $94 a share. So we can use that as like an in-between the main resistance and main support. And the support level is roughly around 90, let's just say 89.5 a share for the main support. This is a very, like, it pushes up to resistance, buy puts with time, write it down. Once it hits support, buy calls, write it with time. This is like very chop right. I mean, it's been zoning the same up down range for almost 6 to 7 months straight now, 7 to 8 months straight. So this is a timely play. If you guys want to play this, I would just be very cautious. So looking at TLT, which is the Treasury bond, we're on a downslope right now. We did chart this last week. So we had levels that we played out. We broke on the downside. We pulled back up to 97.34 and rejected that level. We're currently trying to form a new base, it looks like. So just going off the daily, I'll give you guys a quick possible level, which I'm liking this right here in between. It's pretty good with current price action. I don't just want to put a level like down here and say, oh, like we're dropping down to 91.5. I want to try and find a level around current price action. So I'm going to use, trying to find a good spot. I'm liking around there. So using, I'm going to change the color of it so it's easier to see. And I'll actually make it blue with thicker and some dots. So we had 2 candle wicks and then basically tried to hold support. And then also once we broke back above, tried to hold support. We had a massive rejection in the middle that basically formed a double top, it looks like. So going into the current price action now, we're at that zone currently right now. I don't have any idea what could happen with this. Going off the bigger picture, it looks like it could be forming more downside. But we've had a sell-off before on TLT where we sold off massive and then pushed right back upside. This is going to be like your personal bias. What should I do? We have a support around $95.30 a share. The only resistance I see on the upside is roughly 97.34 a share. So going over to Tesla now, we're at that support that I've been talking to you guys about, around $240 a share. We're trying to hold. So if we can hold 240 a share, we're going to push back up to 248. And then obviously the next level above, which was a historical support that held very well before the breakdown at 255. If we break 240 a share, last time I told you guys I expect us to fill a gap to 218 to 220 a share area, but I'm going to try and find a quick level in between that could come into effect just so that gap doesn't scare some people possibly. So let's put a level. I'm liking the wicks and full bodies around this area. So we got a few wicks, as you can see in between. This can range though. You have to realize I don't chart with levels to a decimal point. It's just a zone, so I have an idea. So around $230 a share, there is going to be some buying pressure between 228 and 230 a share. Taking this to the current price action now, you guys can get a better overview of how that could look. And I have a lot of levels on. Come on, stop doing this. Come on. There we go. We have a lot of levels on Tesla right now. So if we hold 240 a share, push up to 248, and then push up to 255. If we break 240, I expect us to contest roughly 230 a share, Then obviously below 230, we've had this level at roughly 218 to 220 underneath. So looking at XLE, which this has been breaking out, we are approaching the all-time highs with the energy sector. So as we're pushing, we've now outside of this rising wedge, making upside momentum. We're approaching a lot of historical rejection zones from the previous all-time high push that we had. The only level I would watch, downside, obviously, there's not much to use outside of roughly $87 a share. If we're looking at the upside for a possible rejection coming up, I would put a level at roughly, I want to give some space. This is a tough one. Let me switch to the 4 hours, see if I can find a better area. Yeah, it's roughly around here. We could pull it down, but it's not enough gap room. So around $90.50, I would say, is the next fill, which is only a 60-cent push for XLE from where it closed after hours. So going back to the current PA, this is approaching all-time highs. Just realize that. So energy sector has been hot, pull back to 87 for a nice support bounce, rejection around $90.50 before the all-time highs, which is around $93 as around the all-time high. 3,700, yeah, I got you, bro. Let me finish the rest if I have time. So XOP, this is also in the oil slash gas slash energy area. It's going to move with energy sector. Same formation. The levels are going to be around the same. Pullback for support for XOP will be roughly 146.5 a share. Resistance level is going to be around the same spot based off the chart formation, which is going to be roughly $153.50. So look for a pullback to support at roughly 146.5 and then resistance at 153.5. So I'm going to search up SLV. Oh, silver, bro. Oof. So we're still making higher lows. It's very iffy, but we're still making higher lows currently. We're very close to breaking on the downside, but we're still making upside momentum movement. Taking this down to the smaller picture, I'm going to go to the 2 hour. We have a possible bounce around here, around $20.40, $20.50. We're trying to curl. Yes, it's a bear flag, could form the same as above. So be cautious on a break. We have a support only 30 cents below, 40 cents below. If we hold the support and bounce off of this roughly $20.40 area, we could push back up to roughly $21.40. So be cautious, use support, maybe wait for resistance to get puts if you want to play the downside. The bigger picture on this is looking ugly though, so I would be cautious. Let me see, Gilead. There's this gold, gold, silver and gold, same position as well. So I'll do quick levels on this. It's also still making higher lows. Isn't technically bearish yet, but it's trying to. Same idea as the silver indice. We will support level, I'd say roughly around 176.6 area. Resistance is going to be around, there's a nice one right here for support, but it's a zone. So I'm going to do a highlight to show you guys. Around this area is going to be a rejection. So between 179.5 to $180 a share is going to be the rejection zone on GLD. And now I'm gonna, let me keep that level there, take this away. Last but not least, I did not skip over it. I'm just going back to it. Let's look at SPY, you guys. Let's close out on this. I'm going to try and make it very quick. So just looking at the 1 hour time frame for the SPY, I'm going to give you 3 key levels that matter. It's a zone, not a pinpoint. It's just the idea. If we can hold 443.3 on SPY, like we did on Friday, we will be fine and make a retracement to the upside. We have to break above 446.3 area and then 448.3. The main level to watch on SPY for a breakout, 451.8 area, 451.8. Massive level, massive zone. It's not a pinpoint, just in that area. 451.5 to 452. That's going to be a massive reject. If we break on the downside of 443, I want you guys to understand why I have a level around 436. The only indecisive in-between move that could happen is around right here, about 440 a share. SPY is looking for a possible downside move. We're in a falling wedge. We could break upside for a fake out, trap calls, or break on the downside, trap puts to bounce back up. The only two levels I have on the downside, if we break 443.3 area, 440 a share, and the main support at 436.8 on SPY. To recap the upside, we need a break and hold above 446.3 to contest 448.3. Main resistance, the main resistance, 451.8 for SPY.